Welcome to Q Market Roundup, Sunday, 11th April 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of these resources. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use in my live trading. These are the same systems I'll be using today. They run on underlying platforms of TradeStation and MetaStock. That was the last slide. Let's continue with the live system. We'll start by looking at the global markets. For the global markets analysis, I use the Q Global running on MetaStock. I'm using the at a glance weekly daily template, starting with Australian market AXGO. For a long time, Australian market was moving sideways. In the weekly chart, it was inside a triangle pattern bound by trendline resistance and trendline support. This week, it very nicely broke out of that triangle pattern, broke out to the upside. In the daily, it is already up for a few days from the recent low. Using Q technique, one might start to buy individual stocks right when AXJO was starting to go up from the swing low. Now it is a bit extended, also shown by the stretch band indicator being overbought for 4 days. I am not a breakout trader. Either I would have bought at the swing low at this point, or I may now wait for the price for a pullback and then go up again, giving me a low risk entry. XTO was moving sideways and now it has broken out to the upside. Let's look at Japanese index topics. This is now moving inside a triangle pattern in the weekly chart between resistance trend line and support trend line. The direction is not clear and Q traders will avoid taking any directional trade. You may see after displaying a series of bearish headwinds in the weekly chart, price has not gone up. There is a trend line support nearby in the weekly chart, which will coincide with the trend line support in the daily as well. Unless that support is broken, we are not going to look for short trades, and unless the resistance trend line in daily is broken, we are not going to look for any long trades. What about Chinese index CSI 300? After displaying the bearish headwind in the weekly, price could not go up. When price hit the trend line support in weekly, I mentioned price would likely pause for a while. That happened for 1, 2, 3, 4. For 5 weeks in a row, price could not break below the trendline support. How to trade this initial drop to a trendline support, long-term trendline support? You could use short verticals. Time decay would be in your favor, and as price failed to go below trendline support for 5 weeks, you would have significant profit from short verticals. Short put verticals would be bullish trade. And that would also make profit if the instrument moves sideways. That is why when price is suddenly dropping to trendline support, my favorite instrument, one of the favorite techniques, is to use short put verticals at that point. Of course, you have to see the country and the market that you are trading. Are they allowing short put verticals or not? If short put verticals are allowed, right at this point, I would prefer to take a bullish trade using short put verticals, and that would give significant profit by now. The daily, it is moving inside a triangle pattern. Similar to the Japanese market, the direction is not clear at the right edge. I'll wait for price to either break out to the upside or to the downside before taking any directional trade. UK market FTSE index. This was and is still moving sideways in the daily chart, and you may see that movement in the weekly as well. So far, after displaying the bearish headwind, price could not go above the watermark created by the bearish headwind. Now it is moving sideways and it is at the upper edge of the sideways range. Instead of looking for a long trade, if price can tilt down from here, that may give a low risk box short opportunity in individual stocks. Or maybe in this index also, if this index allows trading. Next, India's Nifty 50 index. This is also moving sideways now in the daily chart, bound by trendline resistance and trendline support. We will not take any directional trade unless price can break out of this range. When we look at the global markets, we see several of them are now moving inside the range. That is true for Australia, not Australia, that is true for Japanese market, Chinese market, UK market, and India market. Only Australia market broke to the upside. Earlier, all the global markets, or most of them, were in an uptrend. Now, most of them are moving sideways for swing trading purpose. What about the USA market? For that, let's look at the market ETFs. And for that, I will use Q Elite, running on TradeStation. Starting with S&P 500 ETF SPY, the weekly went straight up for 3 weeks in a row. Most, if not all, people are bullish now. Daily is above upper boundary level, bullish. Weekly is also bullish. When did I become bullish on SPY? If you follow my webinars, then I was bullish at the swing low. That is my favorite point of buying stocks, fundamentally strong stocks. When the market instrument makes a pullback and starts to go up again, I look for buying individual stocks that are fundamentally strong. If you did that, you would have significant profit by now. What to do at the right edge? At the right edge, price is above the upper boundary level. it is overbought for many days shown by the stretch band indicator. I will avoid taking new long positions unless I see an industry that is just about to turn around from downtrend to uptrend. In general, I don't like to buy many long positions when the market instrument is so overbought. It is certainly bullish but overbought. If we look at QQQ, this is also very bullish, though it did not make a new all-time high. SPY easily made a new all-time high this week. QQQ is about to make a new all-time high. Looking at the weekly candle and the daily candle, it seems that next week it is going to take out the watermark resistance and create a new all-time high in QQQ as well. QQQ is also overbought. Dia, like SPY, very bullish. Like SPY made a new all-time high this week on Friday, and it is overbought. IWM, not so bullish. In fact, it is probably the weakest of the market ETFs, shown by the relative performance line tilting down. In this period, IWM was probably the strongest market ETF. Now it is the weakest market ETF. It is also inside a triangle pattern in the daily chart, meaning the direction is not clear. The weekly backdrop is also bearish color, though there is a trend line support in weekly. Unless that support is broken, and probably we'll also need the daily trend line support to be broken, it may not be appropriate to take a short trade in IW, because the other market ETFs, especially SPY, DIA, and to a large extent QQQ, are quite strong. At the same time, I will not take a long trade in IWM unless it can break out of the trendline resistance in daily. The global markets are moving more sideways. However, the USA market is much stronger than that. That is what we can gather from the USA market ETFs. Let's look at the market internals. Mega caps were underperforming for a while. However, that changed. If we look at the USA custom index, mega cap top 20, it was inside a range for a long time. It was inside a squeeze in the weekly chart. For many weeks, the backdrop color was bearish and it had narrow body wicks. For previous 2 weeks, last 2 weeks, it moved up. 1 week ago, it broke out of the range, and this week it continued to move up. It is now close to the, in fact, above the upper boundary, and the stretch band indicator is showing that it is overbought for many days. I don't like to take breakout trades, so it is clearly bullish but overbought. If at all I'm going to look for buying the mega caps, I will now wait for a pullback and then for price to go up again, giving me a low risk entry point. Mega caps are certainly bullish. They turned around from being an underperformer when the relative performance was tilting down to an outperformer. The relative performance sharply tilting down. Is this mega cap strength visible in the other markets as well? Let's look at the major indices. Instead of looking at daily, weekly both, let's look at the weekly to save time. Here I am looking at the four major indices: Dow Jones, Nasdaq 100, S&P 1500 and S&P 500 weekly interval, and looking at multiple market internal studies. The line studies are showing stocks movement relative to major moving averages. The yellow line showing the percentage of stocks above 50-day moving average that has now gone above the average line for all the four indices. If we look at percentage of stocks above 200-day moving average, that is also now above the average line for all the four major indices. The third moving average calculation, percentage of stocks where 50 MA above 200 MA, that is currently also above the average line. So the moving average and prices placement relative to these major moving averages, that is showing a bullish picture in all the four major indices. So not only mega caps, the major indices are also bullish. If we look at the other market internals like new high low, that was bullish all along. It never declined, never turned bearish. Advanced decline and up down volume, they were showing bearish divergences earlier, and I mentioned in my webinar a few weeks ago that the bearish divergence had played out, and now the new high low was always bullish. Advanced decline and up down volume are also bullish now. All the three market internals for all the four major indices are bullish. This picture is certainly bullish. Now let's look at the whole market. Look at it using the Nasdaq as a whole and NYSE as a whole. Let's look at NYSE first. Let's look at the weekly picture. Here also the percentage MA calculations are all above the average lines. New high low, advanced decline, up down volume are also bullish for NYSE as a whole. And if we look at Nasdaq as a whole, let me open the template. Look at the weekly only to save time. Here we can see some difference. The new high low, advanced decline, up down volume are bullish. The moving average above 200 MA is also bullish. However, moving average above 50 MA is bearish. This is the only difference in Nasdaq compared to the other four major indices and compared to NYSE as a whole. So Nasdaq as a whole is slightly more weak than other aspects of the market. In what way? The percentage of stocks above 50 MA for Nasdaq as a whole is still below the average line. That is the only weakness shown in the market. Overall, we have to say that the internals are very bullish. And if we are anticipating any price drop, sharp drop, we could often decipher that from the market breadth total view that shows the picture of the two composite indices, NYSE Nasdaq, and four major indices, Dow Jones Industrials, Nasdaq 100, S&P 500, S&P 1500, in a single weekly daily chart. As I mentioned many times, the market has not dropped sharply unless there was a distribution count of at least 2. or more. But in recent periods, there was no distribution count of 2, only accumulation count. So I'm not expecting the price to drop sharply. Market internals and total view are bullish. Market ETFs were bullish. Now let's look at the sectors, industries, and stock breadth using this very useful 1 month to 1 day sector advance decline, industry advance decline, and stock advance decline. Here, all the pie charts are bullish across all the periods. Green portions are bigger than the red portions. Therefore, be it for the sectors or for the industries or for the stocks, 1 day period, 2 day, 5 day, 10 day, or even 1 month period, sector, industry, stock advance decline is also bullish. The last way we look at the market is using technical breadth. I didn't open Q Finder. Let me open Q Finder. Q Finder shows the technical breadth on your trading universe. For me, I am using S&P 1500 and liquid stocks in the USA market. That is a large number of stocks, almost 2,400, 2,500 stocks. Let's look at the technical breadth for the weekly interval first. That shows the balance of power between bulls and bears using different Q signals. Let's look at the pie charts first. If we look at all technical signals, it is bullish, 70%. Strength signals, 94% bullish. Trend continuation, 61% bullish. Only trend reversal is more bearish, 40% bullish and 60% bearish. But the reversal signals are fewer. We can see from the breakdown of the reversal signals, the individual counts are much smaller than the trend continuation signals here or the strength signals. The counts are much more. So overall, we have to say, of course, we can see it from the all signals. Overall, the weekly technical breadth is bullish. And even though the bearish percentage is bigger for reversal signals, I don't see a large number of bearish headwinds. Therefore, I am not anticipating a market drop certainly. If I look at the daily picture for technical breadth, the last trading day of the week, Friday, again, all signals 70% bullish, and the other categories are all bullish, including the reversal signals. Therefore, overall, the technical breadth is also pretty bullish. We looked at the market from many angles now. First, we looked at the global markets. Global markets are majoritarily moving sideways. When we look at the USA market ETFs are overall pretty bullish. Market internals, when we look at stocks relative to the major moving averages, that is bullish. New high low, advanced decline, up down, volume, those are bullish. Market breadth total view is bullish. Sector, industry, stock, advanced decline, that is bullish. Technical breadth, weekly, that are also bullish. So we have to say unequivocally that the market is bullish. Now market is also overbought, so I am not going to rush to buy many stocks, and that is what I mentioned in several forums, including my Q Skype chat forum also. But I bought some stocks already earlier at swing low point, that is the Q technique. Let me look at some of them, but before I do that, I want to analyze a statement that sell in May and go away. But currently in April, May is going to come after some time. But there is a saying, sell in May and go away. Is May really that bearish? Today I introduced Q seasonality that will help us decide that based on data. This is Q seasonality program. Very simple to use. All you need to do is just input the symbol, the Reuters symbol code or Refinitiv symbol code. You may check the seasonality for any USA stock, any USA ETF, be it financial ETF or commodity ETF like GLD. You may check Forex, you may check Bitcoin, you may check dollar index, you may check futures, again commodity futures like gold, oil, or you could check financial futures like S&P 500 futures. You could check indices like SPX, DJI. These are for USA markets. Now you may use it for global markets also, whether it is for Australia market, China market, Japan, India, Hong Kong, any market. I have tested with all types of instrument in all kinds of markets, all countries, and it seems to work fine. All you need to do is input the ticker symbol here, a Reuters symbol. Not the brokerage ticker symbol, but the Reuters symbol. And it will do the seasonality analysis using 20 years of data, long period. I didn't want to go beyond 20 years because the market environment may not be representative. Another reason I didn't want to go beyond 20 years is because, like all other Q systems, Q seasonality is also 100% real time. I don't store any data locally. Therefore, I didn't want to load the system too much by going beyond 20 years. I thought 20 years should be representative enough of what may happen next month. What does it do? It gathers the data for 20 years and shows the percentage changes in those 20 years across the 12 months, January to December. Then it calculates of all those periods. Sometimes it may load 20 years data. Sometimes if data is not available, it may not have all the 20 periods. So it first shows how many periods of data is available, and out of them for each month, how many times it went up, the first number in the pair, and how many times it went down. Then it uses those up down numbers to calculate percentages, the percentage of times up and percentage of times down. Let's look at percentage of times up. If that crosses significant thresholds like 80%, then it is colored in cyan to alert us visually here and here. If it crosses 70%, then it colors again with bright green. First with cyan, 80% or more, bullish seasonality. Bright green, 70% or more, and dark green, 60% or more, bullish seasonality. On the bearish side, it will show magenta for 80% or more bearish seasonality, bright red for 70% or more bearish seasonality, and 60% or more will be shown by dark red. This is the seasonality analysis for SPY. Currently, we are in April. April has strong bullish seasonality. Out of last 20 years, 16 years went up in April, only 4 years went down. The average gain over those 20 years is 2.61%. But if we look at the average gain of the years when it went up, that was 3.91%. Average loss of the years that it went down, that was minus 2.56%. So if currently the market is bullish, and it is looking bullish, the overbought, the market is certainly bullish. If we are expecting it to go up, then we may look at the percentage gain for the years when it went up. That is a 3.9% gain. We are currently in the second week of April. How much has price already gone up by? Not a small percentage, 3.8%. So the average gain of the up years is 3.9% for April, and we are already up by 3.8%. Can it go up more? Yes, because we see the data for last 20 years. The biggest percentages, top 20 and bottom 20, are shown in bold case, and green color is for up moves. We can see instantly visually that it did actually go up by 12.7% in April previous year, 2020. And then we have a large up move here on April 2009. That was by 9.93%. We also had a large up move in 2003, 8.46%, and 2001, 7%, 7.04. So though it is already up by 3.8% and the average gain for up years is 3.9, we see there are several instances when it went up by much bigger percentages. So though it is overbought, historically, we see that it can go up further. Now, there is this saying, again, let's come back to that, sell in May and go away. Is May so bearish for SPY? If we use Q seasonality, we see no. In fact, it has 70% bullish seasonality in May. So though there are some sayings in the market, we may use robust data, and definitive data, real-time data is quite robust. When you use that, you see actually as a whole for SPY, May is not bearish at all. 70% of the times it went up, and you see some of the times it went up by not so small percent, 4.7%, 5.8%, 3.3, 5.4. Overall, it is 70% bullish seasonality for May also, though it is less bullish than April. And if you want to see based on Q seasonality, which month is most bullish for S&P 500? That is clearly November. It has 85% bullish seasonality. So you will be able to take long trades in November more confidently, and so will you be in this month of April based on seasonality. Now this is the picture of SPY. If I change it to QQQ, let's do that. All you need to do is just change the instrument symbol to the ticker symbol QQQ.O. It will connect with Refinitiv, collect all the 20 years data and do the calculation and display in a visual form how is the seasonality. You will see QQQ is also bullish, but less bullish than SPY for the month of April. Give it a few seconds, it will retrieve the data and do the calculation. Calculation is complete. Now you can see instead of 80% bullish seasonality that was there for SPY, QQQ has only 65% bullish seasonality. It is bullish but much lower than SPY. Now, isn't it interesting how the different Q components are coming together? When you look at the market internals, we saw only one aspect was slightly less bullish. What was that? That was for NASDAQ, percentage of stocks above 50 MA, that was still below the average line. That was kind of the only weakness we could see when studying market internals. What was that for? That was for NASDAQ. That was for technology as a whole. And even for QQQ, we see the same is true. There is some weakness, relative weakness. It is not bearish, but relatively technology is weaker in terms of seasonality as well as in terms of market internals. Though the mega caps are up, mega caps are only a couple of stocks. As a whole, technology, when we look at market internals, Nasdaq as a whole, or we look at QQQ in terms of seasonality, it is showing relative weakness. Overall, the market is still bullish. Now, if you wanted to check for any stock, you could do that. Many people trade Netflix based on seasonality. Let's check that out, nflx.o. When retrieving data, it shows the instrument here. You remember for SPY, it showed ETF, and for Netflix, it is showing ordinary share, netflix.o, nflx.o. Now it is retrieving the data, and you will see something interesting in terms of seasonality, and that is how traders use seasonality. Which are the most bullish for which months are most bullish for Netflix? They are January, 74% bullish seasonality, and also March, 74% bullish seasonality. The average gain in the month of January, for the times it was up for the last 20 years, average gain was 28%. That is huge. In March also, it had same seasonality, 74% up, but if we look at the average when up percentage, that was much smaller, 7.6. The probability of making profit was more or was same both in January and March in terms of seasonality. That was probability of profit, this 74%. However, the amount of profit was much more in January than in March. That is how to use seasonality. Now, one would not, guideline is not to just use seasonality and go and buy a stock, but if you see strong seasonality, like for SPY for April, market ETF, or for Netflix in January, you will then use for a Q-trade setup, one of the unambiguous setups that you can identify using Q-Sonar program, real-time search program, and you will take the trade quite confidently. And when you have seasonality in your favor so strongly, like Netflix in January, you may not mind buying a stock before earnings, using a Q-trade setup, of course, those give low risk buy points, and then holding it across earnings. To avoid risk of sudden drop after earnings, you may use option strategies, but the seasonality will help you decide to take only a long trade in the month of April, in the month of January for Netflix. What about a stock that is involved in shipping items? Let's say Fedex. And I was having a chat with one of the Q traders, John, and he mentioned this, that Fedex tends to have strong seasonality near the end of the year. And we verified that using Q seasonality also. Let's give it a few seconds to retrieve the data. Everything is done in real time. All you need to do is enter the symbol, be it for the USA market or any global market. In fact, I would like to show something interesting for India market. This is the data for Fedex. Where is the strongest seasonality? In the month of November. 80% of the times Fedex went up. So knowing that, armed with that information, you may look for a buy setup in Fedex more confidently in the month of November. Now, one thing interesting I'd like to show, I mentioned this can be used for futures also, and also for any country. Let's check for India market, two futures instruments. These are not commodity futures, market futures. One is Nifty 50. Earlier, I studied global markets and used the index, Nifty 50 index, NSCI, but now I'm going to use Nifty 50 futures, NIF. NIF is the code. And I will later compare that with the bank Nifty to show some difference and how you may help, how may use Q seasonality in this way to decide what to trade, what not to trade. doing some calculation. Calculation is done. Now let's focus on the current month of April. Current month of April is bullish for Nifty 50 futures in India. 60% of the times it went up, and when it went up, for those years, the average gain is 5.6%, not bad for a market futures. Of course, December is more bullish in terms of seasonality, but let's stick with April for the time being. April, the current month, is bullish for Nifty 50. However, I want to compare that with Bank Nifty. The financial sector is very large in the India market. If we look at Bank Nifty, and again, I'm not using the index, but using the futures in NBN is the code. Remember, for Nifty as a whole, seasonality was 60% bullish in this month of April, and let's see for Bank Nifty how it is. It has completed the calculation. It is much more bullish. Instead of 60%, Bank Nifty is 73% bullish in the month of April. The average gain for up years is also much bigger, 8%. So if you are looking in a market and you compare different futures or different ETFs, you will be able to decide not only whether to take long trades, but which sectors to focus on. You could do similar exercise for USA market also. Look at the market using SPY, QQQ, DIA, and look at individual sector ETFs to see how the seasonality is advantageous or disadvantageous for a sector in the current month, for example. That was an introduction to Q seasonality. It is released now. If you were using Q Edge Vital Index, it is already added to your account. This is the beta version. You may download it from the usual download page and start using it. You don't need to follow any installation steps. You just need to copy the Q seasonality into your working folder and start using it. Well, now let's look at some of the stocks that I shared earlier, either on Q Skype group or on forum or Twitter. Let's look at a stock that I was looking for a bearish entry point. That was Home Depot. I mentioned in a forum post that from this low to the high, you can see Home Depot HT went up in a straight line without any pullback. Without any pullback whatsoever, made this 20% plus up move. Then it displayed two indecisive candles at the top. At that time, I was looking for a short entry. Intraday, this candle was looking weaker. However, at the close of the day, it had a lower tail as well as upper tail. The shape was indecisive at the top. So that didn't allow me any short entry, even using intraday chart or hourly charts. And after that, it has continued to go up. So though I was looking for a bearish trade, and that was primarily because it went up in a straight line without a pullback. A pullback is overdue. See, from the stretch band indicator, for how many days in a row it is overbought. However, there was no trade setup, not even using the intraday chart. So I'm tracking this, but there is no entry so far. That was a stock where I was looking for a short trade based on overbought condition, hugely overbought. The other stock where I was looking for a bearish entry was ITRI. The weekly has dropped in case of ITRI, and this week's candle shape, color, both are bearish. In the daily, it came down, retraced, and it went down again. If on Friday it gave a magenta candle, bearish flow in daily chart, that would confirm a with flow short trade setup, where the profit target would be lower boundary, entry point would be close of Friday, stop would be above recent high. That would give attractive reward risk ratio. However, the trade was not confirmed because the candle color did not close with magenta color. So I was looking for a short trade here, but didn't get it. ITRI is still weaker than the market clearly because the relative performance is tilting down on Friday, while SPY Dia made new all-time high. The stock came down by 1.19%, but still I didn't have a Q short trade setup, so one may wait for that. I'll be happier now if it comes to the trend line resistance and tilts down from there. That may give me an even lower risk shorting opportunity. I'll track that. By the way, ITRI and HD Home Depot, where I was looking for short trades, both of them have some fundamental weakness. Otherwise, I would not look to short them. And I saw those weaknesses and shared them on my forum. So I looked for 2 short trades, but they were not confirmed. On the other hand, I shared several long ideas. The last one that I shared on forum was on bio. Very strong fundamental. What setup did it give? On Thursday, it gave a, or one of these days. Which day? Let's check the forum exactly when did I share it. Did I share it in the forum or Skype chat? Let's search. Yes, this is bio. 3 days ago, I shared it. Let's look at the post. That will show exactly what I looked at when I shared the idea. I shared it on which date? Let's check that out. 3 days ago, 8th April, time 1:36 p.m. New York time. Bio. How did I identify it? I identified it from Q Elite Sonar. It gave a pullback setup and also a bullish flow. It was in a confirmed uptrend above both yellow and white direction lines. Traffic light, daily candle color was bullish. So I identified the pullback setup from Q Elite Sonar. The industry, life science, tools and services was very weak earlier, shown by this industry rotation score, and it improved a lot. Right on the day when I shared it using real-time industry rotation, you could see it was one of the strongest industries, relatively speaking. 143 score out of total 147 industries. So it was one of the best performing, and the pace column was showing that it was accelerating as well. The industry allowed me to take a turnaround buying opportunity. And this was the fundamentals. This is what I call star candidate in terms of fundamentals. Undervalued stock with earnings growth, great earnings growth, not only in the last quarter, for last 3 quarters and last 3 years, positive earnings growth. There is revenue growth as well. Undervalued with earnings growth. We saw the relative score was very strong, and in itself also 84% of the 81 peer stocks of Bio-Rad Laboratories was strong. Last step was to look for the technical setup on Q charts. We already saw the pullback setup from Sonar. That's how I identified it, and we can see right when I shared it, the weekly was bullish both in color and shape. Daily regained the yellow line white line was below it, so that was giving a pullback setup. Price was in an uptrend, pullback, and starting to go up again, regaining the yellow line. It had a bullish flow as well that we saw from solar as well. So it gave a pullback setup 3 days ago, and if you see today, since then price is going up. Therefore, the long entry that I shared is working well. That was bio, and that was a pullback setup. Let's look at some other stocks. One gold mining stock that I shared, and you probably know I am in long position in most or if not all of these positions that I share. I shared SSRM, a gold mining stock, right on this day. That was giving me a box long trade setup. If you applied the unambiguous checklist conditions, the box setup is designed to catch double bottoms or sideways movement. So this was a double bottom, and I could identify it right on this day. It had a trend line resistance at that time, but that trend line was broken. Price has gone up. Now it is near another trend line resistance. Thursday and Friday, both of those days, price opened lower but closed near the high. Both Thursday and Friday has bullish color. If price can break out, then I will continue to hold on to my long position. This was a gold mining stock. And if you check its fundamentals, let's use the Q Vital program, you will see, just like in case of bio, the stock I explained just now, different setup, pullback setup, but very strong fundamentals. SSRM gave a box setup. However, its fundamentals were also very strong. Fundamentals don't change every day, so I expect it to be strong today also. Let's look at it. Q Vital for fundamental and peer analysis using real-time data. It's retrieving the data and then calculating the scorecard. Give it a few seconds more. By the way, I'm traveling and I'm using a laptop, not so powerful like the desktop I use usually for my roundups. That is why I had to use Zoom and then broadcast to YouTube from Zoom instead of using my other technologies that I use for YouTube live broadcast. I hope the YouTube broadcast will come out all right. See here, SSRM, great valuation, great earnings growth, also a short squeeze potential. So this was also a star fundamental buying candidate. I bought it right at the bottom. Another stock, I have another gold miner that I shared, I think on the Q Skype group, gold. But let's look at SSP to save time. GOLD, by the way, is also in profit. Now SSP. This was one of the stocks that was affected by this Archegos, if I'm pronouncing correctly, the family business that went bankrupt, family office that went bankrupt. What happened to the stock? It sharply came down. Where did it come down to? Came right to the weekly trend line support and this long-term daily trend line support. I think I shared it right on this day when the bull release came, or one of these days. Let's find that out. I might have shared it on forum. Let's check that out first. Yeah, I shared it 12 days ago. All these ideas that I share are always before knowing the result. I don't have to know of sharing ideas after knowing the result. I think there is something not so genuine about doing that. So I share before knowing the result. For SSP, I shared it on 30th March. 2:57 p.m. What did I see? Let's look at it. The industry score, broadcasting industry, was starting to go up. Just a while ago, the broadcasting industry score was 1, the worst possible. From there, it jumped to 129. Or if you look at alternative industry, that also went up. And the percentage change from being large negative, it turned to positive. It's time data. So it was a turnaround industry. And that was even more clear from the industry rotation scorecard. It was score 1 just a while ago. Over 1 month, it had score of 5. Then it became the worst performer 1. But right on the day when I shared it using real-time analysis, the score jumped to 129. 1 to 129 in a matter of 2 days. That was a huge jump. That was also showing up as acceleration under the base column. So this was an easy turnaround candidate identification in terms of industry. And I saw the stock, it was already up by more than 3% at that time. Medium valuation, secondary valuation was undervalued, and see the huge earnings growth. 938% in the last quarter, also huge earnings growth in the previous quarter. As revenue growth as well, steady revenue growth for 3 quarters, 3 years, has a short squeeze potential. Relative score was very strong, and in itself, 75% of stocks, PR stocks, 28 PR stocks for broadcasting industry was up on that day. How was the technical chart looking right at that time? As I was showing, right at that time, it came to weekly trendline support and daily trendline support. Displayed a bull release signal, had a bullish shape candle. Price regained the yellow direction line, white direction line was below it. So it gave a pullback long setup, and it was also bouncing up from trendline support, weekly, daily both. Plus it displayed a bull release. So there were many bullish signals, and I shared it at that time. The first yellow candle after the series of red candles, and see SSP today. I shared it right on this day. First yellow candle after a series of red candles. After that, it has steadily gone up. That is how, using Q technique, you are able to catch the bottom using these very powerful support lines in this case, and in case of shorting, you would use resistance lines. When the market is bullish, I tend to take only bullish trades, and I take those trades in stocks that are fundamentally strong, like SSP, like SSRM, that are giving me low risk buy setups. Again, SSP, pullback, bounce setup, SSRM, box setup. And I also like to buy in industries that are strong. Gold mining was strong when I bought it, and when I bought SSRM, broadcasting was strong when I bought SSP. And these trades are working out pretty well, as Q trades tend to do. That's why I tend to mention always that if you are disciplined, have a robust system like Q systems, and now even having access to seasonality, there is no reason not to lose money if we are disciplined. Market is looking bullish but overbought. I am not taking many new long positions. The ones that I am holding, some of them I shared just now, I'm continuing to hold. They all are in a nice profit, covered the risk distance for all, if not most, if not all of them. We're at 1 hour point. Let me end today's session here. Thanks a lot for joining. I'm traveling, so I'm not sure if I can conduct the Wednesday midweek market roundup. If I can, I will do that certainly. And as usual, I'll notify you through Twitter. I'll also notify you through the Q Skype chat if you are part of that. Thanks again for joining. Have a great weekend. And let me repeat it. No reason not to do that, as my shared trade ideas show. Trade profitably.